What's going on, everyone? In this video, we're going to be doing a little bit more talking about prop firm challenges and the risk management that goes into passing some of these firms' evaluations or combines or whatever it is that they want to call them. Now, I'm funded, full disclosure, with 3 different prop firms. In those prop firms are Top Step, Apex, as well as Surge Trader. I think they all offer a little bit different kind of pros and cons to them. Not every prop firm is going to be the best. Not every prop firm is going to be the worst. They all got good things about them. They all have things that, could be changed a little bit. Top Step just recently made some new changes, making their platform a little bit more better. I would kind of give them a little bit of a higher nod as far as customer service and their back end and their rule set. And then obviously, Apex has a horrible trailing drawdown. You just have to understand how to play that. It's more so used for scalping, not necessarily used for like all day trends, just due to the fact that, you want to take those initial pops at new highs versus kind of letting the trade draw out. With that being said, and then Surge Trader, I like them because you can trade equities like stocks, right? So with that being said, what we're going to be looking at here, look at this little P&L here. Trade count 35, because I was trading anywhere between 5 and 10 micro contracts on the NASDAQ, but trade P&L was $315.50. The commissions was $113.22. My net P&L is $202. That's all I want you guys to focus on. Also want you guys to focus on today, my trades were 85% winners. Okay, so 85% of my trades I won. So that means for every 7 to 8 trades that I was taking, I was only taking 2 to 3 losses. With that kind of being looked at, yes, I only made $200 on the day, but this is where, especially when you're utilizing prop firms, why risk management is so key. On my prop firm accounts, and I'm funded with these 3 different companies, and Apex, I do have multiple accounts. I am never looking to really kind of trade a bunch of mini contracts. Now, when you trade mini contracts, and if I was to trade mini contracts today on the same number of trades that I did, yeah, maybe I didn't make 2,000, maybe I would have made 2,000. Maybe I wouldn't have made 200, I would have made 2,000. That sounds very, very nice, but when you are dealing with these firms where they do have strict rules as far as daily drawdowns, weekly drawdowns, trailing drawdowns, and if you go over certain amounts, you can blow and lose your funded accounts. It's not worth it to me, guys. What is worth it to me, and the way I would recommend doing this, is trade micros on the ES, on the NASDAQ. Those ticker symbols are going to be MES or MNQ. And I would trade no more than 3, 4, or 5 micro contracts. The reason being is that your stops are going to be a lot more manageable than if you were trading minis. For example, you might be looking at a $250 loss, $300 loss versus a $2,000 or $3,000 loss if you were trading minis. Now, I understand some people are going to be, well, it's going to take longer to pass the challenge, but my question is going to be to you, what is the rush? Most of these prop firms now have no time limit. We are not in the Forex space where they give you these funky 30-day challenges where you have to pass in 30 days. And if you don't, you got to reset or request more time. Most futures firms are unlimited amount of time to pass. Okay. So what this really is breaking down to is your lack of patience and your lack of discipline. If you are in a race to get funded and pass these challenges, you are going to fail over and over and over and over. And you're going to still be wondering 6 months, 12 months, 18 months down the road, why you have yet to turn the page and be consistent. You need to be patient. Now, I want you guys to really listen to what I'm saying. If you focus on making $100, $150, $200 a day, there's 5 trading days in a week. We're obviously not going to win every single day. We are going to have some losing days in there. We're going to have some break-even days in there. But let's, for the sake of the video and for the sake of this training, let's say that we're profitable 3 out of the 5 days. And 3 out of those 5 days, we make anywhere between $100 and $200 a day. And we have the discipline to cut ourselves off and walk away from the screens. Well, if you look at $100 a day times 3 profitable trading days, that would be $300 a week. $300 a week over 2 weeks is $600, over 3 weeks is $900, over 4 weeks is $1,200. If we were in the ballpark closer to that $200 range, we would be closer to the ballpark of making $600 a week, $1,200 over 2 weeks, and $2,400 over the course of a month. So we're talking about making $1,200 to $2,000 on our account. Now, I am going off an account size of $50,000 or $100,000, giving you enough leverage to kind of play 3, 4, 5 micro contracts and kind of keep the stress levels down. So the idea in this game, the idea when it comes to risk management and getting funded and actually getting payouts with these companies is to manage your emotions, manage your stress in a way that you can take trades on a day in and day out basis. Focus on those small base hits and kind of accumulate that cushion over a series of accounts. So yes, does $1,200 something that everyone can kind of live off of? Maybe in a third world country or a country that where their minimum wage is a lot less than here in the United States, maybe you can do that, which is perfectly fine. There's nothing wrong with that. But for us here, living off of $1,200 would be very, very hard unless you live at home, you're 18 years old, you don't have any bills, and you can just kind of grow that $1,000 month over month. With that being said, if you're making closer to $200, we're looking at $2,000, which is a little bit better, still not there yet. But if you have 2 accounts now and you focus on making $1,000 a day, or $1,000 a month or $2,000 a month, depending on if you're shooting for $100, shooting for $200, and you're able to have the discipline to stop out. Now over 2 accounts, we're either looking at $2,000 a month or $4,000. Over 3 accounts, we're either looking at $3,000 a month or $6,000. At 4 accounts, we're looking at $4,000 a month or $8,000. You can quickly see how leveraging more accounts with either the same firm or multiple firms can get you onto the road that you need to be on, and your risk management stays the same. We are not out there looking for home runs. We're not out there trying to make $8,000 in one trade. We would rather do it over 2 or 3 accounts. Some days you're going to make more than $200. You're going to make $300, $500. But if we can average over the course of 30 days, $100, $150, $200, and we can now spread that across 2, 3, 4 funded accounts, now you start to get the ball rolling and you start to have some leverage. Please, when I tell you this, I am talking to you with 8+ years of experience, over 6 years of doing this full time. I am going to tell you from the bottom of my heart, from one trader to the next trader, leave social media and all that stuff, that crazy flashy stuff that you see at the doors. Not saying that it's not obtainable, but in the beginning, if that's all you're really gravitating towards is that lifestyle, that car, that house, that, whatever it is, right? If that's all you see, that's going to create so much anxiety and a need to not be disciplined, right? And a need to kind of put your foot on that gas pedal and stretch yourself farther than you should by oversizing or over leveraging a position versus taking it the smart way. Look at it like this. I look at it like this. Even though I'm just an individual, I look at the assets that I have under management between my personal brokerage account where I trade options, as well as the multiple funded accounts that I have with different prop firms. I look at that as, and sometimes I pretend that I am a hedge fund manager, or I'm this money manager, this market manager, this asset manager, where I have accumulated and I have a portfolio, a book of business where I manage these funds, and I'm in charge of managing these multiple 6 figures, and I am looking for 2 to 3% on my money a year. What does your biggest kind of investment manager do for you? If they worked for Charles Schwab or they worked for Merrill Lynch, they're looking for those small gains and those small percentages. As a trader, that's exactly what I'm trying to replicate and do for myself. I'm looking to take a book of business, bring in more clients. And for me, more clients is more funding. So more funding, however I get that, whether it's adding in additional personal money into my personal account, or that's acquiring more prop firm accounts and getting more assets under management. If I can bring in another $100,000 funded account, I look at that as I just closed another $100,000 client. And now with adding that $100,000 client, if I can just bring in 1 to 2% a month on that book of business, that's going to add an additional $1,000 to $2,000 a month to my bottom line. Listen to what I just said again. If you have one funded account with a particular trading prop firm, okay, you've got one funded account and it's $100,000 and you're shooting for 1 to 3%, either you're going to make $1,000, $2,000, or $3,000 on that return of that $100,000. Now, if you close and you pass another combine where you add an additional $100,000, tell yourself this: I just closed another $100,000 client, and now I am in charge of managing $200,000, and I'm looking for a return of 1 to 3% on this book of business, on this portfolio, each and every single month. And if you can focus on that by taking $1,000 here, $2,000 here, $500 here, it's going to start add up. The more clients you add, hence the more funded accounts that you have. Again, you will sit here in 12 months time from now and have 5, 6 clients, which is accounts, right? I'm just putting it into kind of a different kind of terminology, so maybe it starts to click with some of you guys. You close 6 clients all at $100,000. You're now managing over $500,000 in funding. Let's get a return on our investment. Let's focus and let's work these charts. Let's manage this risk. Let's bring in 1 to 2, 1 to 3% each and every single month. That can be attainable. 1% on a $500,000 account is attainable. That's $5,000 a month. $5,000 can change your life. It changed my life. As soon as you get up to 2%, 3%, and you're making $7,000, $8,000, $9,000, $10,000, this is now talking about really life-changing money. But the first things first is you have to be okay with making $100 a day. You have to be okay with making $150 a day. You have to be okay with making $200 a day, because if you're okay with that, all it takes after that is bringing in more clients, building out that book of business. I hope this helps you guys. I hope it gave you a little bit of a light bulb switch on how you can approach these prop firms. If you guys want to sign up with any of the ones that I use, they're all down in the description box below. If you guys are looking for a strategy, you're looking for one-on-one coaching, mentorship, definitely join evolutiontraders.com. That's my website. You're going to get access to the chat room, the Discord, my watch list, and 1-hour phone calls with me each and every single week. I will see you guys on the inside.